Ladies and gentlemen, Tanner's is on time. Okay. That's what he does on PayPal earnings day. Hopefully, you guys are doing well. Good to speak with you. Happy to be covering PayPal earnings. We're going live with the earnings call in about 20 minutes. Before that time, however, let's cover a few things. So, one, PayPal stock has just released earnings. The stock is hovering about up 1% in the after hours, bouncing between just being flat and up 1%. Now, let's go over what they've actually shown off, okay? I first want to start out, well, maybe I shouldn't start out here, but this is quite interesting for me, is this quote from Alex Chris. And I'll talk why this is so important, because it's seemingly like the actual earnings are all lying on Alex Chris in their commentary. But first, I'm paying attention more to the non-GAAP basis here. Okay, net revenue is up to $7.4 billion, up 9% year over year. Operating income up 8% to $1.6 billion. And then EPS, that makes it at $1.30 per share. Now, stock-based compensation, or sorry, not stock-based compensation. The buybacks are actually on pace to improve, and I'll show that off in a second. But this has just been catching my eye, as this quote right here, so I want to read this. My first 30 days leading PayPal has confirmed my belief in the company's strong assets and market position. Now we must harness these strengths and put the weight of the organization behind our most important priorities. The reason why this is so important, guys, is because this is exactly the idea of them selling off happy returns. It's the focus. It's the idea that we're going to sort of drop the idea of, acquiring new businesses, find things that aren't about PayPal's business and going out of what we already know. No, we want a focused company. We want to increase those transactional margins, and we want to get back to what we're used to doing. In the process, we'll become more efficient so we can innovate and execute at higher velocity. The opportunity to drive greater impact for our customers and unlock profitable growth makes it an exciting time to be at PayPal. The brand new CEO of PayPal, Alex Chris. By the way, they also brought in a new CFO, Jamie Miller, effective November 6th. She steps in. Hopefully, we hear a little bit about that as well, if she had a previous relationship with Alex Chris, or how they actually picked her out, because hopefully it's coming from their side and not something from old management side. But still, quite exciting. Total payment volume is up 15% on spot, 13% on a why am I blanking right now? An FX neutral basis. Anyway. So Gap, let me see what else here. Let's see what Rabinovich has said. So PayPal delivering solid third quarter results with currency neutral revenue growth and EPS ahead of expectations. Our performance demonstrates disciplined expense management and capital allocation. We are focused on accelerating our profitable growth. Okay, but let's find some commentary here on transactional margin, which continued to come down a little bit slower than how it's come down in previous quarters. So this is still the highlight. We knew this was going to happen. We spoke about this literally yesterday. Okay, so this is not out of what we were expecting, and that's why the stock isn't absolutely falling off a cliff. This is one thing I was really worried about. Okay, guys, is like we're seeing all of these fintech stocks, and they're just or especially in the payments game, dropping down 30-50% after they release earnings, and mainly on guidance just getting absolutely crushed. We didn't see that from PayPal, so there is some survivability in the stock. Currently, it's sitting up 1.1% in the after hours, but transaction margins still at 45.4%. Commentary on this earnings call will be most important, because for 3 quarters in a row now, they've said this will improve in Q4 of 2023. If they move that benchmark, the stock gets crushed. If they continue on that benchmark and they actually do increase, okay, then we will see some lightening up in the stock, or at least I would assume so. Total payment volume is increasing, right? And we're going into holiday season, so hopefully there's once again an increase on there for Q4. If you guys don't know, it's pretty easy to understand. Q4, holiday season, lots of spending, all right? Number of payment transactions increasing. Let me see. Payments per active. 56.6. Yeah. So this still goes to further. Let me see if I can find a chart on this actually, just to make it a little bit more easy on the eyes. Okay, perfect. So let me switch my screen over and we will jump into this. Okay. So accounts are dropping off. Okay. So this is another thing that people need to understand about PayPal. During COVID, they were going out and trying to acquire clients just any means necessary, anyone they could possibly find. Oh, lobby music is starting to play. Let me just turn that down. Okay. That means we're 15 minutes out from the earnings call. So I'll keep you guys updated. Regardless, I cannot wait to hear Alex Chris. Oh my God, I'm getting so hyped up. That being said, with accounts, they went out and acquired anyone they could possibly find as a person to sign up for PayPal. Here's an incentive. Customer acquisition cost was quite high. And these people might have made one purchase, maybe two purchases with PayPal and then stopped using them. Okay. That was not their way to grow. What they've actually found out is that there is a core audience, let's say 20 to 30% of people. I think it's somewhere along the lines of 170 million people, or maybe even less than that, that are really, really into PayPal. They do all their bill payments through it. They set up, subscriptions through PayPal. They do everything through PayPal. And so what they've realized over the last couple of quarters out of COVID is that we need to just stop worrying about acquiring active members as any means necessary. So we're going to see that number come down a little bit, but the actual amount of transactions per active person is really going to see growth there. One thing I see here, 13% of growth in transactions per active was predominantly driven by transaction growth from Braintree. I hope and pray we see some actual, real commentary on Braintree. I want to know their strategy for collecting these large clients, like, for example, Microsoft or even Uber and these sorts of ones. I want to know, what are they doing? Because obviously commentary from their competitors is that they're just charging practically zero to offer or to get these actual transactions. And then what they're hoping for is that once, the PayPal button is on every single website, that people will then start using that source. And that's where the money comes from. Revenue continues to increase. Doesn't this look like a dying company, ladies and gentlemen? This looks like a company that's going to zero, doesn't it? Because that's the way the stock is being priced. Cross-border trades still held up $47 billion, same as last quarter. Total payment volume continues to increase quarter over quarter over quarter. Venmo TPV increased to 68 billion. Let me just add that to my chart because I didn't catch that. 67 billion last quarter. Year over year, that was 63.6 billion. Okay. All right. As the actual call goes along, I'll fill out my spreadsheets and everything and get ready for after the call. I'm going to have a bunch of people actually coming on to this live stream. So we have some people that have never been on the stream before. Hoping to see some recurring faces, maybe Roy, maybe Stephen Fiorillo, maybe a couple of people that hold some PayPal. So I think we'll actually have a fun little panel going after the call, or we'll obviously be listening, not cutting off, Alex Chris. Everything that he says will be very important for me to hear. I want to see that vision, or else this statement could be true. PayPal is a dinosaur. Yeah. Look at this dinosaur growing transactions per active. Let me see what else. Oh, sorry, I was searching for that. Transaction margin dollars pressured with impact from lapping. Decline 3%. Negative lapping impact from lower gains on foreign exchange hedges of $150 million and $75 million of merchant contractual compensation in Q3 2022 that did not reoccur. Right, we spoke about this. The merchant cleanup fees and that $150 million. They saw that both in Q2 and Q3. They did not see that in Q4. So one of the exciting things is that if we are seeing this just flat growth on growth basis, that hopefully that'll pick up the transaction margins. Transaction loss rate was 8 basis points, in line with Q3 of 2022. Credit loss rate was 3 basis points, in line with Q3 of 2022. Very interesting. Yeah, like I said, this is also why the stock is not negatively reacting nearly as much as last time, is because this was expected. Transaction margin pressure was expected, and it's all about Q4. So it's going to be guidance that is actually going to determine what the stock will do. Non-transaction operating expense growth, yeah. This is exactly what we saw last quarter. This is what we're seeing now. Sales and marketing, they're just cutting it completely. See, this is their strategy. Let's not just go out and spend a ton. Let's actually cut it back. Customer support and operations. Gotta love when that cuts down, eh? They're not going to pick up your phone calls anymore. But very exciting. This is a growth company that still has growth opportunities, but this is the shift from growth to value. And so those multiples are all coming down. But if you guys remember, maybe I can pull this up for you. This actually, why don't I wait a couple hours and wait for Koifin to update their numbers? Because the margins are going to get even better considering all the growth that we're seeing. So if the stock doesn't move and we've just printed new earnings, well, that just means that, we're going to have better multiples on things like price to sales as revenue climbs and, earnings get better. Okay, non-GAAP operating margin is improving a little bit, just quarter over quarter. See, the problem is that the operating margin is actually improving because of artificial reasons. And I don't want to say artificial like this isn't real, but it's like you can only bring down your customer support and operations so far, right? So if, for example, we're making less and less dollars per transaction on the total amount of volume that we're bringing onto the platform, well, you can only make up for that on an operating margin side by doing things that help with expenses. The expenses can only come down so low. Eventually, you'll have to turn to the transaction margin side. And if PayPal, I just want to make this clear, if you can get to a point where you're continuing to bring down technology spend in sales and marketing and customer support and all these things, and transaction margin is getting better because the merchants are willing to pay more for better features, then sky is the limit. Then you see the ultimate increase in operating margin. Very, very cool. Earnings per share continues to climb. And then let's just take a look at, let's see the held for sale impact. Yeah, that was the selling to KKY. Yeah, European buy now loans originated as held for sale. Cool. And once again, still that acquisition, the yellow, is completely going away. And what we're seeing is a focus more on returning capital to shareholders. In fact, even year to date, it's 4.4 billion. That's more than any of these prior years. And that's why we're seeing, the buyback rates or the buyback yield on the stock at like 9% right now. So it means that we turn to things to be more built in-house. It means that, the buy now, pay later platform that we're designing right now, I say we, I mean, John Kim and his team. I'm not a part of PayPal. I just, as a shareholder, I place myself in, an ownership position in a way. It's just the way that I've always done it. But that being said, absolutely stunned by this chart. I mean, they have gone away from the idea of just buying companies to fund growth. If we can build it in-house and we find out that, PayPal's buy now, pay later is one of the most successful products, especially in buy now, pay later. They think they're top 2 in America right now, and maybe top 3 globally. That being said, if they can do that and then push all these actual, capital allocation to shareholders, that means good things for me as a shareholder for sure. Guidance. Okay. Non-GAAP EPS growth expected at 21% for the total of 2023. That would lead to $4.98 per share. That's crazy whenever you think about the share price now. Free cash flow of $4.6 billion. Uh, yeah. Okay. Non-GAAP operating margin expansion of 75 basis points. Yeah. Share repurchases are still on point for 5 billion. So what is that? 600 million that they're expecting in Q4? Okay. All right. Yeah. Call should be starting in 5 minutes. Very, very excited. I cannot wait to hear. Oh, strengthen business relationships, Meta and PayPal. Since 2010, PayPal and Meta have joined collaborating across various businesses and product areas. What's the news here? Meta introduced Instagram and Facebook Shops. They engage with PayPal to power the end-to-end payment experience for a subset of sellers. Meta also uses PayPal Hyperwallet for the payouts of the creator community in several of their markets. Recently, PayPal expanded the offering to Meta by enabling Braintree as a card processor to Meta's advertising business. Meta also utilizes PayPal's giving fund to support donations benefiting nonprofits in the US, UK, Canada, and Australia. By working together, PayPal and Meta are able to provide better experiences for their customers and support important causes through charitable giving. I'm telling you, PayPal is winning large cases on the Braintree side. This this is so funny. They really are doing something different, and whether that's great for the industry in general, it's good for PayPal. Um, PayPal launches US dollar denominated stablecoin. Yeah, we knew that. I hope that they give some commentary here, see when they're going to expand it globally, because I do think, a couple ways that they make this very good is things like remittances, makes it very cheap. Um, and Dan Schulman shed some light on this previously. They think that they'll be able to get the cost down if they can process payments through stablecoin versus traditional means of about 1/100th of the cost. So people can think that PayPal and payments are dead. Not even close. There is so much more work to be done here, and I'm very excited to get this company at such a cheap valuation. See, that's the important part that I want you guys to understand. I don't necessarily support PayPal to the point where I think this is the next big, all-in-one app, that this is the company that's going to disrupt traditional finance or beat out Apple Pay. I don't think anything like that. I just think, you can find a company that still is growing and has a ton of potential that isn't valued correctly, right? I think that people are pricing this stock for no growth. In fact, depreciating transaction margins just for forever, and that we're just going to be losing out because FedNow has come out. It's like that. I don't think that's how it works. I think there's still growth in these companies, and people aren't ready to give up PayPal or even stop working with Braintree. I think there's so much growth left in payments, considering there's still this massive transition between going from a cash society to a cashless society. And as we push towards more things like the metaverse and anyway, I don't want to get too futuristic with it, but I just think the idea is that more technology equals more digital payments, and especially if, for example, the government is cracking down on things and trying to work with companies to get better reporting so then they can spot fraud and crime and all of these things, that PayPal is one of the most trusted brands out there. Okay. And that I think that they benefit largely from the idea that maybe there's a little bit more government oversight or something like this. And politically, whether you agree with that or not, or you find that, an exciting cause, I do think that there's a lot of money to be made on betting on the idea that there is a shift to a cashless society. And if you guys know, if 900 people watching right now, if you guys don't know, I like fintech stocks. They're getting absolutely destroyed right now, but it leads to a great buying opportunity. Sure, there might be a position right now where quantitative tightening or these sorts of things, where maybe the total amount of money supply out there is actually going down, right? So that actually hurts companies like Visa, MasterCard, PayPal. This is not good for PayPal. But that's not going to be always, okay? There will be a time where quantitative easing comes back, because that's the way America stays on top of their debt payments is through inflation and artificially by printing it. They are the printing press, and whenever that happens, payment companies benefit greatly. The call is on. I'm going to switch over. Give me one quick second. Bear with me.
To prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, again, press star 1. Thank you. I would now like to introduce your host for today's call, Ryan Wallace, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, and thank you for joining us. Welcome to PayPal's earnings conference call for the third quarter of 2023. Joining me today on the call is Alex Chriss, our President and CEO, and Gabrielle Rabinovich, SVP and Acting CFO. We're providing a slide presentation to accompany our commentary. This conference call is also being webcast. Both the presentation and call are available on our Investor Relations website. In discussing our company's performance, we will refer to some non-GAAP measures. You can find the reconciliation of these non-GAAP measures to the most directly comparable GAAP measures in the presentation accompanying this conference call. We will make forward-looking statements that are based on our current expectations, forecasts, and assumptions and involve risks and uncertainties. These statements include, without limitation, our guidance for the third quarter and full year 2023, our planning assumptions for 2023, our comments related to anticipated foreign exchange rates, operating margin, impacts from our sale of loans to KKR, and share repurchase activity. Our actual results may differ materially from these statements. You can find more information about risks, uncertainties, and other factors that could affect our results in our most recent annual report on Form 10-K and quarterly report on Form 10-Q filed with the SEC and available on our Investor Relations website. You should not place undue reliance on any forward-looking statements. All information in this presentation is as of today's date, November 1st, 2023. We expressly disclaim any obligation to update this information. And with that, let me turn the call over to Alex.
Thank you, Ryan, and thank you to everyone for joining us this afternoon. It is a pleasure to speak with you all on today's call, my first as President and CEO of PayPal. Before I dive in, I'd like to take a moment to thank my predecessor, Dan Schulman, for his diligence and professionalism in handing over the reins and helping me onboard quickly. Additionally, I'm very excited to welcome Jamie Miller to PayPal as the company's next Chief Financial Officer. Jamie will officially be joining PayPal on November 6th. Jamie is a world-class CFO who joins us with decades of experience in both senior finance and operations roles at a number of different Fortune 100 and private companies, including GE and Cargill, and was most recently CFO of EY. Jamie is a vital addition to our team. Under Jamie's leadership, I have no doubt that we will drive the financial discipline, necessary efficiencies, and operational excellence our company requires. I look forward to introducing Jamie to you over the coming months, and you will also hear from her, of course, on our next earnings call. As excited as we are to welcome Jamie, I also want to take a moment to express my sincere thanks to Gabrielle for all her hard work, dedication, and passion as interim and then acting CFO. She's helped drive the company forward and has been instrumental in helping me get up to speed over the past couple of months. I truly appreciate her partnership as well as her commitment to PayPal and look forward to working with her during this next chapter of PayPal's journey. Okay, let's jump in. When I was asked by the board to take on the CEO role, I was so energized by the possibilities of the impact PayPal can have on the world. I've dedicated the last 19 years of my career to fighting for the underdog, helping consumers and small businesses around the world achieve their dreams, interact with each other, and build a better life. PayPal takes that mission to a whole new level. The assets, the data, the scale, and the brand, the full foundation of what PayPal sits on today is unrivaled. And for me, that is the opportunity of a lifetime. I am also walking in eyes wide open. There are clearly challenges to tackle. I am someone who speaks plainly and transparently. If we are doing things well, I will highlight them. If there are things we can do better and need to fix, then I will have no hesitation in calling those out too. Our innovation activity has accelerated, but we still have work to do on maximizing our impact for our customers and results. Competition and complexity have increased, and the company's focus has not been clear. We are doing a lot of things, but are we focused enough with our resource allocation? Are we executing with excellence behind the most important work to provide customers with a compelling and differentiated value proposition? Are we partnering with customers in a way that brings them deep value, but also rewards the PayPal shareholder? These are questions I am maniacally focused on answering with the team and doing a better job of executing across the board. But let me be clear, notwithstanding those realities, this is a growth company with great prospects. Even within the first month on the job, I am more energized and have more conviction and clarity than I expected over how we win. We have significant opportunities for growth and impact. The foundation is strong, and the value pools and growth vectors are there. We must simply execute better and with higher velocity, and we will. I'd now like to share with you all my onboarding process and what I've learned and observed so far. Then I will describe changes you will see going forward. And lastly, I'll set expectations for what you will see from us over the next few quarters. While I have only been here a little over 4 weeks, I have been conducting in-depth conversations with internal and external stakeholders, including employees, customers, partners, and investors, and diving into the business with our product and go-to-market teams. The feedback has been encouraging, exciting, revealing, and very clear. There are 2 lenses I've had in synthesizing the input. First, how do we differentiate in solving the most critical customer problems? Second, what are our unique growth vectors, and how do we accelerate our impact for customers and shareholders? Before I run through my thoughts after 30 days, first, let me say I've been surprised and delighted with how consistent and clear the answers to the previous questions have become. We are not searching for ideas for tremendous growth. Our assets and our position in the market are incredible. We know exactly what needs to be done. We simply must execute. To give you some additional context, here are a few of my initial observations. On our employees, our people are kind, caring, dynamic, innovative, and engaged. They care deeply about our customers and one another and are energized by our mission. My focus is to clearly define our mission, vision, and purpose, and unleash this team to execute a clearly defined and durable strategy. We will establish and refocus systems and processes to galvanize the entire organization behind our purpose and growth outcomes. On our customers and innovation, I generally see our customers falling into 3 categories: consumers, small businesses, and large enterprises. When looking at our customers through this lens, each segment has unique assets and a multitude of growth opportunities. I've been encouraged by how much innovation our teams are delivering, but we have an opportunity to A, focus our teams on what's most important to these customers, and B, package our innovation in a way that is clear and differentiates us in the market. Let me give you some examples. For consumers, we have not only tremendous breadth, mind share, and wallet share of our consumers, but these are active and engaged users. In the US alone, over 70% of the adult population has used PayPal in the past 5 years. Let me say that again. Over 70% of adults in the US have used PayPal in the past 5 years. And with the recent launch of our Venmo Teen account, we are now seeing adoption of our core products and services across the entire addressable market in the US. Additionally, we've innovated with unique products and experiences for consumers that each on their own provide tremendous customer benefit. For example, our PayPal Cashback MasterCard provides 3% cashback on PayPal purchases, as well as cashback on all other purchases. Customers with this card make on average 56 more purchases with PayPal in the year after they adopt the product than they did the year before. Over 25 million consumers have used PayPal rewards in the past 12 months, and we've put more than $200 million back in our customers' pockets with cashback and savings during that time. But even more interesting, through our rewards product, we have an active database of over 300 million SKUs of inventory from our merchant partners. These data points can help us use AI to power a robust shopping recommendation engine to provide more relevant rewards and savings back to our customers. We've just begun and already rolled out passkeys to more than 10 million consumers globally to reduce friction in the sign-in experience. We've added additional security features by providing fraud alerts for all your cards in the PayPal wallet. We're gaining ubiquity both online and in person as our PayPal and Venmo branded credit and debit cards can now be added in the Apple and Google wallets. And we've launched the first regulated stablecoin by a global payments company in PYUSD, connecting our PayPal and Venmo ecosystems together and creating one of the most robust peer-to-peer networks in the world. Individually, these are each incredible innovations, but we have not yet brought them all together into a cohesive, integrated, and seamless customer experience and value proposition. As I said at the beginning, we have brand awareness and reach consumers in most markets around the world. They know PayPal and they are rooting for us. It is our responsibility to now put together these innovations into a world-class, seamless experience. And that is exactly what we're going to do. As an example, we have refocused our consumer product and go-to-market team to relaunch a brand new end-to-end consumer experience with checkout at the center that will bring value to consumers with every single purchase. We will make it abundantly clear why choose PayPal. This is the first core priority I've asked the teams to focus on. Next, for small businesses, the core customer problem we can solve is helping them get more customers. From a breadth and depth perspective, we again have tremendous reach. We serve approximately 35 million merchant accounts, and the vast majorities are SMBs. We have recently launched our new PayPal Complete Payment solution in the market. This solution helps small businesses sell globally and accept a range of payments, including PayPal, Venmo, and PayPal Pay Later products to help drive checkout. We provide SMBs the tools to transact globally and are innovating for them with critical services such as package tracking. Package tracking is now live with over 5,000 merchants on BigCommerce, WooCommerce, and UltraCart. Early results show merchants are experiencing an 80% decrease in item not received disputes, 40% higher dispute wins, and 65% faster funds release. This is a good start, but what really gets me excited is how all of our profile and payment data comes together to empower each of our merchants to improve their conversion rates via our next generation checkout, while making our consumers' checkout experiences more efficient. We've just rolled this product out to a handful of pilot merchants, and with the breadth of our consumer coverage, we are able to identify the majority of consumers that visit a merchant's site. That means we can autofill payment information for consumers and streamline guest checkout for our merchants. To serve small businesses with our best-in-class product, we must get PayPal Complete Payments to scale globally. This is the second core priority I have asked our product and go-to-market teams to rally behind, and you will see us with a concerted push to dramatically improve the end-to-end PayPal Complete Payments product, rollout, and adoption in the next couple of quarters. Once we've accomplished this, we will have earned the right to expand additional offerings to small businesses. As someone with deep experience scaling products and services for the small business segment, we have the right to play and win in a number of meaningful and durable businesses that will solve core customer problems and delight our users. Lastly, for our enterprise customers, we have proven that we can win in the market and take share with Braintree, serving the largest enterprises such as Adobe, Booking.com, DoorDash, Ticketmaster, and Uber. In the last 12 months, we processed over $450 billion in volume out of an estimated 4 to 5 trillion of global large enterprise e-commerce. That's approximately 10% flowing through us. We now have a beachhead to build upon. We will address additional customer needs such as payouts, fraud management, chargeback automation, and FX. These value-added services not only address specific customer pain points, but also help PayPal drive additional margin. To be clear, our focus here will be continuing to improve performance, provide additional services, and expand margin. And lastly, on our company as a whole, let me touch briefly on our evolution to operating as a platform company. Our ability to seamlessly delight customers end to end is a function of the quality of our technology and data platforms, which are very strong. But we have a significant and important opportunity to further become a platform company that builds company-wide capabilities, accelerates at scale, and drives efficiencies across the organization. Fully unlocking this will accelerate innovation, velocity in the market, and value. Further, our data and scale are key strengths. Our machine learning capabilities combine hundreds of risk and fraud models with dozens of real-time analytics engines and petabytes of payments data to generate insights by learning users' behaviors, relationships, interests, and spending habits. This scale gives us a very unique advantage in the market. Our ability to create meaningful profiles with the help of AI is exceptionally promising. You will see us using our data and the advances in generative AI in responsible ways to further connect our merchants and consumers together in a tight flywheel. This is essential. We must build products and customer experiences that are strengthened by our unique two-sided network. Harnessing an end-to-end data platform will help us drive network effects throughout our business. In order to maximize this opportunity, it will require technology consolidation and automation across the company. Simply put, our cost base remains too high, and it's actually slowing us down. As such, I am in the process of evaluating our most profitable growth priorities and aligning our resources to those priorities. We will become leaner, more efficient, and more effective, driving greater velocity, innovation, and impact for customers. To recap my observations and focus areas, our assets and breadth are unrivaled. Our innovation is accelerating and will drive impact, but we must focus and execute. The weight of the organization will be squarely behind 1, reinventing our consumer experience to drive a clear and durable value proposition with checkout at the center. 2, improving and scaling PayPal Complete Payments for small businesses globally. And 3, driving margin expansion in Braintree and other products for large enterprises. Additionally, we will invest in our company-wide platform, driving efficiency and acceleration of innovation while right-sizing our expenses. Now, I'd like to share what you can expect from me in terms of how we will communicate to all of you and the principles to which we will adhere. You'll see this starting with our next earnings call in terms of how we report our numbers and what we view as important metrics to our shareholders. I believe in the last several years, it has been difficult to model our company consistently because the company itself hasn't provided consistent metrics to allow you to do so. That is going to change. For our next earnings call, we will unpack for you the following. First, We will be clear what our operating principles are and how these principles drive the growth opportunities we pursue, and in turn, drive capital allocation, technology allocation, and talent allocation decisions across our business. Second, we will be clear about what metrics matter the most to us and how we are managing the business. I can tell you right now, what I care about most is high quality customer growth and profitable revenue growth. Going forward, PayPal will be focused on generating real profit for the company. I can't emphasize that last statement enough. It is key to how I believe this company should be run, and it is how you should expect us to measure our performance. Unprofitable growth is counterproductive to the long-term prospects of this or any other growth-oriented company. Third, as a management team, we will be guided by margin accretive revenue growth. Over time, I believe we have a tremendous opportunity to grow revenue outside of purely transaction-related volume as we continue to serve our customers' core needs. We are taking a closer look at how best to report our financial performance and which KPIs we will be focused on going forward. Once we complete this review, we will consistently use the same metrics, and it will be easy for you to model the business, judge our performance, and hold us accountable. Next, I want all stakeholders to be able to understand in a simple way how we do what we do and how we make money doing it. This includes our customers, as they are the lifeblood of our existence. Lastly, I am laser focused on operating leverage and making sure we manage our cost base with relentless attention and commitment. As I said before, I believe our cost base and complex structure is slowing us down. We have opportunities to accelerate our revenue growth while reducing our expenses, helping further drive operating leverage. In terms of a timeline from here, I can tell you that we are already hard at work determining a comprehensive plan for 2024 and ensuring we are prepared to deliver it. There are teams stacked against the focus areas I mentioned earlier, and they are deep in execution mode. Our core execution and fast twitch operating muscles are building by the day. In parallel, the leadership team and I are refreshing our strategic priorities and focus areas for 2024, and we'll be sharing them with you in our next earnings call in February. I will unpack for you then the clarity of our strategic focus, our focused growth priorities, and how we will achieve durable, profitable growth. Adjustments we will make to drive efficiencies across the organization and guide what you can expect us to deliver in 2024. It is clear to me that the things we need to do better aren't all going to be achieved overnight. And of course, business, like life, is not a straight line. However, I can tell you one thing for sure. We are going to move at lightning speed to get there as quickly as possible. With that, I'd like to hand the call over to Gabrielle to take you through the Q3 results, and then would be happy to take some questions.
Give me a second to catch
Thanks,
my
Alex.
breath.
It's great to have you on board. The past few weeks have been incredibly inspiring and invigorating. There's renewed energy and excitement at PayPal with you leading us forward. I look forward to welcoming Jamie and working with you as we enter this new chapter of growth for PayPal. I share Alex's enthusiasm for our increased pace of innovation and the outstanding opportunities we have given the power and scale of our global franchise. And I agree that with increased focus and improved prioritization, accelerating our growth and delivering operating leverage are mutually reinforcing. Importantly, we're committed to increased transparency and improved consistency in how we discuss our business and the ongoing enhancement of our disclosures. I would also like to thank the entire PayPal team for their steadfast focus on delivering for our customers and executing our priorities. First, several highlights from the quarter. We're reporting 9% revenue growth on a currency-neutral basis and 20% growth in non-GAAP earnings per share, both of which are ahead of our guidance. In the third quarter, we again demonstrated strong expense discipline and our ability to operate our business with improved efficiencies. In addition, we continue to make progress in the quarter across our long-term strategic initiatives, which are focused on driving more profitable growth. Moving to our customers, we're encouraged by new cohorts coming in. Retention and active use based on product innovations are starting to pay off. That said, during the quarter, active accounts declined by 2.8 million as we continue to flush out low-quality customers, predominantly in Latin America and Southeast Asia. As a reminder, we said this would be a year where we churn off lower-quality actives and in which total accounts would decline. Year to date, churn has been lower than our expectations. Customer growth is a vital pillar of our growth agenda. We're an organization focused on serving our customers and improving our value proposition, and we're positioning ourselves for a return to growth in our customer base. Turning to volume growth, we're reporting total payment volume of $387.7 billion, representing 15% growth at spot and 13% growth on a currency-neutral basis, with that growth primarily driven by Braintree. U.S. TPV grew 10%. International TPV grew 19% currency-neutral, accelerating 5 points sequentially, primarily driven by strength in Europe as well as improvement in Asia. I would now like to comment on our branded checkout performance. PayPal's global branded checkout volumes grew approximately 6% in the quarter on a currency-neutral basis, relative to 7.5% growth in Q3 last year. Growth accelerated in July to 8%, but moderated as we moved through the quarter. To date in Q4, branded trends have stabilized and are tracking in line with the first half of the year. As I mentioned, revenue increased 9% on a currency-neutral basis and 8% at spot to $7.4 billion. Transaction revenue grew 7% to $6.7 billion, driven by Braintree and PayPal branded checkout. Hedge gains for the quarter were $7 million, $149 million lower than Q3 last year. In Q3 of last year, we also benefited from approximately $75 million in contractual compensation from merchants, which did not contribute to our revenue this year. In addition, as we discussed last quarter, migrating and consolidating legacy PayPal payment services was also a drag on the growth in transaction revenue. Other value-added services revenue grew 25% to $764 million, almost entirely driven by increased interest income on customer stored balances. In the third quarter, U.S. revenue grew 7%. International revenue increased 10% at spot and 11% on a currency-neutral basis, accelerating sequentially and year over year. As with TPV, we saw strengthening performance across Europe, which was most pronounced in the early to mid-summer. And in China, our seller business improved as well. Transaction take rate declined 13 basis points to 1.72%. Similar to our Q2 results, approximately 70% of this decline was driven by three factors: lower gains from foreign currency hedges, which are recorded as international transaction revenue, a decline in foreign exchange fees, in part driven by lower currency volatility, and the headwind from lapping elevated contractual compensation from merchants last year. In addition, the mix of volumes from large merchants continued to pressure our branded checkout take rate. Our total take rate declined 12 basis points to 1.91% and was affected by the same factors as transaction take rate. Transaction expense as a rate of TPV came in at 93 basis points, 4 basis points higher than Q3 last year. This increase was primarily driven by Braintree volume growth and was partially offset by the geographic mix of PayPal volumes and rate benefits in Venmo. Transaction loss as a rate of TPV was 8 basis points for the quarter, flat to last year. Credit losses were $117 million, or 3 basis points as a rate of TPV. In the aggregate, volume-based expenses increased 21% in the third quarter. Consistent with our expectations going into the quarter, Q3 saw a higher level of pressure on transaction margin dollar and rate performance due to several lapping and more transitory factors that we've discussed on past earnings calls. Transaction margin dollars declined 3.5% to $3.4 billion, and transaction margin declined 558 basis points to 45.4%. In the third quarter, we delivered 540 basis points of operating expense leverage. Non-transaction related operating expenses declined 12%. We've been actively managing our cost structure, and in Q3, reductions across each of our principal operating expense categories contributed significant leverage. Non-GAAP operating income grew 8% in the quarter to $1.6 billion. Our non-GAAP operating margin declined 18 basis points to 22.2%, with operating expense leverage largely offsetting transaction margin compression. For the third quarter, non-GAAP EPS increased 20% to $1.30, which exceeded the high end of our guidance range by 6 cents. We ended the quarter with cash equivalents, and investments of $15 billion. We generated $1.1 billion in free cash flow, which represents a 30% decline from the third quarter last year. As a reminder, last quarter, we classified the European installment loans that we intended to sell to KKR as held for sale. All loans subsequently originated in this portfolio are also classified as held for sale and are reflected as outflows within cash flow from operations. In Q3, this dynamic reduced free cash flow by $810 million. In future periods, we will recognize the cash from proceeds of sales as an offsetting inflow to cash flow from operations. Adjusting for this temporary impact, free cash flow grew 21% to $1.9 billion. Our strong balance sheet and free cash flow generation are competitive differentiators and provide us with significant optionality for value creation. We have also made progress this year, executing a disciplined approach to capital allocation and managing our balance sheet. In the third quarter, we completed an additional $1.4 billion in share repurchases. Through September 30, we've now returned $4.4 billion to shareholders. For the full year, we continue to expect to allocate approximately $5 billion to our share repurchase program. Given our conviction in our business relative to its valuation today, we've taken a more aggressive approach to our capital return program and have reduced our weighted average shares outstanding by 7% over the last 8 quarters. We believe that share repurchase remains an optimal use of capital, allowing us to retain the flexibility to continue investing opportunistically in our business. In addition, as a result of our decision to sell our European pay later receivables to KKR, we ended Q3 with $5 billion in net credit receivables, a 16% decline year over year, and a 9% decline sequentially. 2 weeks ago, we closed on the first step of this commitment, receiving approximately $1.4 billion in proceeds. Later this month, we will close on the next tranche of our backbook sale of credit receivables. We are also maintaining a tightened origination strategy for the PayPal business loans portfolio. Principal and interest receivables declined nearly 30% in the quarter, and this portfolio now represents approximately 12% of our overall credit receivables portfolio versus 21% 12 months ago. As you heard from Alex, we're evaluating our growth priorities and aligning our resources to accelerate our velocity. With greater focus, we can be more effective. Consistent with this approach, we're divesting Happy Returns. In September, we entered into an agreement to sell Happy Returns to UPS for $465 million in cash, meaningfully higher than our acquisition price. We're thrilled that following a rigorous process over many months, our team was able to find Happy Returns the right long-term home with UPS. This sale, which is expected to close in the current quarter, will enable us to put even more focus on our core business and priorities. I would now like to discuss our outlook for the remainder of the year. Relative to the plan laid out on our earnings call 3 months ago, branded checkout growth has been lower than expected. As I mentioned earlier, after an acceleration in the summer, we've seen a return to growth that is more in line with trends throughout the first half of 2023. We now expect fourth quarter revenue to grow between 7% and 8% on a currency-neutral basis, or approximately 6% to 7% at spot, In addition, we expect non-GAAP EPS in Q4 to be approximately $1.36, representing 10% growth relative to 2022. Our guidance contemplates a sequential improvement in transaction margin dollar performance. That said, on a year-over-year basis, we now expect transaction margin dollars to decline. In addition, we expect our non-GAAP operating margin to contract from the fourth quarter last year. For 2023, we now expect revenue to grow approximately 8.5% on a currency-neutral basis and approximately 7.5% at spot. The ongoing strength of Braintree volumes, in conjunction with lower than expected branded checkout trends, are resulting in incremental pressure on our non-GAAP operating margin. Relative to the 100 basis points of expansion previously expected, we now expect approximately 75 basis points of margin expansion. We're slightly increasing our expectations for full year 2023 non-GAAP EPS, which we now expect to be approximately $4.98, representing 21% growth from last year. This increase reflects the benefit of Q3 outperformance and changes to our tax rate assumption. In addition, we now expect free cash flow for 2023 to be at least $4.6 billion. In closing, we believe that we're well positioned to navigate the road ahead. As Alex noted in his comments, we're working on our plans to accelerate profitable growth, and we'll share our progress with you along the way with consistency and transparency. We're committed to building PayPal for the future and guided by our relentless focus on creating the best possible experiences for our customers. Backdrop continues to be complex. We're taking an appropriately prudent approach to managing our business. And with that, Alex and I are happy to take your questions.
At this time, I would like to remind everyone, in order to ask a question,
Jeez.
please press star followed by the number 1 on your telephone keypad. We ask that you please limit yourself to one question and then return to the queue. We'll pause for a moment to compile the Q&A roster. Your first question comes from the line of Tien-Tsin Huang from JP Morgan. Please go ahead. Your line is open.
Hey, thanks so much. And Alex, appreciate your observations and priorities here. Can you maybe share a little bit more on your early impressions of the assets and the portfolio products at PayPal? I'm just love to hear what surprised to the upside and maybe what assets could require more work to turn around than what you thought. And if for example, Happy Returns being sold, as you called out last week, we see more sales, divestitures, replatforming, that kind of thing. Thank you.
Yeah, thank you, Tien-Tsin, and good to hear from you. It's been exciting to come in. I would be remiss if I didn't say this wasn't a surprise, but has delighted me from an asset perspective. The first I'd highlight is our employee base. This is a tremendous team that is energized, has welcomed me to the team, and is fired up to go tackle all the opportunities ahead of us. If I didn't think about the different components, I've been really impressed with all the different pieces that we have to deliver for consumers. We have a ubiquitous platform that is globally recognized with PayPal. Venmo is a verb, and it's something that is tremendous in the US and has opportunities beyond. If I think about all the different core problems that we can solve with the assets that we have for customers, rewards, buy now, pay later, cashback cards, all of those are tremendous and within our grasp. We just, as I mentioned earlier, just have to put them together into a core value proposition. And that's what the team's working towards right now. On the merchant side, again, we have tremendous penetration into small businesses and enterprises. We have a beachhead now with Braintree, which I'm really excited about. And I think we've earned the right now to expand margin and make sure that we're really pricing to value and ensuring that we're delivering what we need to across the board. And then if I really think about the biggest surprise that I didn't realize before coming in is probably around the data. When we look at the data that we have across this two-sided network, it allows us to do things that I think others just can't. And when I think about how we can personalize branded checkout, how we can recognize people at checkout with our data and create an experience that is frictionless, that is personalized, that drives conversion for our merchants, I think we're just scratching the surface of the opportunity there. And so that is a big opportunity that gets me very excited. In terms of opportunities where we have more work, I think you saw it with the Happy Returns divestiture. And what I would say overall is we have lots of opportunities, but we're doing too many things. We're spread too thin. And we have an opportunity to focus the organization on what matters the most, on the most impactful opportunities to customers and to growing the business. And we'll be looking at that over time.
Great. Thanks, Alex. Thanks, Gabs.
Your next question comes from the line of Ramsey El-Assal from Barclays. Please go ahead. Your line is open.
Hi, Alex and Gabrielle, and appreciate all the clarity you guys provided on your priorities. You gave us some great detail also on your approach to the SMB side of the business, such as some commentary on PPCP. I guess the question is, given your prior experience with SMBs, do you see SMB becoming a more important part of PayPal's strategy relative to the past? And I guess which areas of the product or innovation roadmap get you most charged up at this point?
Yeah, thank you, Ramsey. Small businesses are a passion of mine. It has been for the last 19 years, and it's very personal. I used to run a small business, and so it's in my DNA, and something that not only is important to PayPal and has been in the past. It's really been the lifeblood of the organization, but it absolutely will be a priority going forward. When I think about small businesses in general, there's two really core customer challenges that small businesses have. The first is getting customers and growing their business, and the second is managing cash flow. On the getting customer side, we have a tremendous opportunity with PPCP to help them convert customers, to find customers, to drive new customer acquisition, and really help them over time. This is a data play, it's a ubiquity play, and with our two-sided network, it's where we're focused right now. Once we do that, I think we earn the right to expand into their second challenge of cash flow. Cash flow is all about money in, money out, and access to capital. We play in all three of those areas. We just have to put together the assets that we have to be able to help small businesses, again, manage their cash flow in a way that helps them grow their business and get past any ups and downs in the market. So very excited about small businesses going forward.
Fantastic. Thank you so much.
Your next question comes from the line of Darrin Peller from Wolfe Research. Please go ahead. Your line is open.
Hey, thanks, guys. Alex, congrats again on the new role, and Gabrielle, thanks for everything. Obviously, we know you'll be missed by your investors. Guys, I know you lowered your outlook a bit for revenue in fourth quarter, and I think you said you continue to see a decrease in gross profit for fourth quarter. Can you just give us a bit more color on what you're seeing in the environment on e-com, both U.S. and perhaps globally, and just if anything you're seeing in the trends is what led to a more cautious outlook, either on the holidays or anything more broadly? Thanks, guys.
Yeah, Darrin, you bet. Thanks for the question. Overall, I'd say we're seeing very healthy trends in our checkout business. We're heading into the heart of Q4, and we really have seen no meaningful shifts in our performance or our demand environment. We have taken an appropriately prudent approach to planning for Q4, and obviously we've contemplated a range of outcomes. As you know, headed into Q3, we had expected to see branded checkout accelerate through the back half. Branded did bump up in July, and as I discussed a few minutes earlier, it moderated through Q3. Overall, we've seen very solid performance in branded. So when we think about the sort of what we're seeing in the back half relative to the first half, very consistent performance in global branded checkout, but it's just not as elevated as we'd planned. And that's really what's informing the outlook.
Got it. Thanks, Gab.
Your next question comes from the line of Mike Ng from Goldman Sachs. Please go ahead. Your line is open.
Hey, good afternoon. Thanks for the question. First, Alex, congratulations on the new role, and Gabrielle, thanks for everything. I appreciate your comments around managing the cost base and it being too high. Could you talk a little bit about how you think about balancing the need for investment versus efficiency? The company previously talked about the opportunity for OpEx to keep declining in the years ahead. Is that how we should still think about the future? Thanks.
Yeah, thanks, Mike. First, let me say, as I mentioned earlier, this is a growth company, and we are going to assess the focused priorities where we will invest in growth, and we will make sure those are funded for success. And so I think about that separately than also being able to manage OpEx. On the expense side, we have an opportunity to continue to manage OpEx efficiently. We have a lot of acquisitions that we've done over the past few years. We have a lot of duplication and a lot of manual work that we have an opportunity to invest in automation. We have an opportunity to invest in a platform that allows us to build services that can be reused and leveraged across the organization, which will, again, as I mentioned earlier, actually accelerate us and speed the company up. So I think about them differently. We will absolutely invest in growth and make sure that the levers that we have to continue to delight customers and grow the business are funded for success. And then we will work on building a platform that drives automation and continues to drive down our cost base.
Great. Thank you for the thoughts.
Your next question comes from the line of Jason Kupferberg from Bank of America. Please go ahead. Your line is open.
Good afternoon, guys. Alex, welcome. Gabrielle, best of luck. And I wanted to actually ask about the transaction profit dollar growth. In Q4, will that year-over-year decline be more or less than it was in Q3? And then how should we think about the potential for this metric to see improved growth into 2024? Maybe you can comment on which of the initiatives that are in place offer more potential than others to move the needle on transaction profit dollar growth next year. Thank you.
Yeah, you bet, Jason. Maybe I'll start. Well, as you heard Alex discuss, and I commented it as well, our focus really is on driving profitable growth, and we're putting the weight of the organization against initiatives consistent with that objective. That said, we did see a decline in our Q3 transaction margin dollars. We do expect them to decline again in Q4, but to a lesser extent. So I'd really view Q3 as the low point, and we'd expect to see an improvement in the profile in Q4. In addition, obviously, we're not guiding 2024 on this call. Longer term, our success will in part be determined by our ability to reaccelerate profitable growth in the business, and we expect to be able to do that. Alex, anything else you want to add?
I want to underscore, I know I said it in the comments, and I just want to underscore it again. We have every opportunity to drive profitable growth. It's just a focus and a discipline that we will bring to the organization. And so it will take time. There will be, a sequential performance improvement over a number of quarters. But when we make it the focus of the organization, we have enough levers at our disposal to be able to deliver on that.
Thank you.
We have time for one more question. James Faucette from Morgan Stanley, please go ahead. Your line is open.
Thank you so much for the question, and want to add my welcome to Alex and thanks to Gabrielle for all the work she's done in the CFO seat. One of the assets that you talked about within that population of the U.S. is Venmo, and I'm wondering how you're thinking about expanding its acceptance and kind of the to-dos around that. It seems like it's really important demographically. You have at least a foothold at Amazon, but expansion of acceptance elsewhere online especially has been pretty slow. So just wondering how you're thinking about that as part of the asset pool and the to-do list there. Thanks.
Yeah, thank you, James, for the question. And it is pretty rare to be able to have an asset as powerful as Venmo when something, again, becomes a verb in language, is a tremendous demographic. And, you saw with our launch of Venmo Teen, we continue to expand the opportunity set there. As you mentioned, we're in early stages with Amazon. That is going well, and we expect that both from a customer demand perspective as well as a merchant demand perspective, we will continue to drive acceptance ubiquity for Venmo.
I think that is very important for us, as well as just driving additional services that our customers are demanding for the Venmo app. And so again, as we think about providing different services, expanding the opportunity for our customers to be delighted and use Venmo for all aspects of their spending and managing of money, I think we're just, again, scratching the surface of what's possible with an app that is clearly loved in the market and has created viral growth. So very excited to accelerate investment there and see where we can take Venmo.
Thank you. I will now turn the conference over to Alex Chriss for closing remarks.
Great. Thank you, Krista. And thanks, everyone, for joining us today. Hopefully, you can see how serious we are about growing and improving PayPal across the board as quickly as possible. Before we close, I want to leave you with 3 thoughts. You've heard in my voice today both a confidence that we will make this company excel and a determination to do it as quickly and thoroughly as possible. We have an excellent business, but it needs to execute better and with greater clarity and focus, and it will. We will impact the go-to-market strategy and financial focus of the company in ways that are immediately impactful. It won't happen overnight, but we will get PayPal to the kind of consistent growth profile we all expect. As I've said it already, but it bears repeating one last time, what I care about is profitable growth. That is going to be our true north and receive our total focus. I've spent my entire career focusing on making sure we delight our customers and solve their most critical problems, but we must ensure we serve all our stakeholders. And lastly, our employee base is fired up and motivated to win in the market. In addition, you can also expect us to add additional senior talent to our team, who I believe can help significantly accelerate our growth trajectory. We are future-proofing this business, and we know what needs to be done. We are playing to win. In the weeks and months ahead, we are going to be moving with velocity to deliver for our customers and our business. I look forward to talking to you all on our next call in February and laying out our clear plan to win. Thank you and have a great day.
Man, that was a great earnings call. Like the earnings, this is good. Earnings call. Woo! Alex Chriss. You're muted.
Yeah. Sorry, I first wanted to say, Neil, happy to have you on the show. Glad you could join in.
Happy to be here.
That was a real shock for some of the people that were watching the show and have seen both of us from 2 different sides of YouTube and probably weren't expecting to see you here today. So it's definitely a shock to some.
The multiverse. The multiverse.
Yeah. But yeah, I knew this was all going to be about commentary. How would Alex Chriss come on and start talking? The only thing I didn't like was right at the end saying, you can hear in the confidence in my voice. I mean, it kind of takes away, if you know that people are doing that, then you can kind of just sound confident. But what did you guys think?
Yeah, like the initial description when you're reading the slides, it's the slide deck. It's solid earnings for quarter 3. It's like, yeah, that's solid earnings. A little bit better on some numbers, a little bit worse on some numbers. The expectations were revised upward mostly, but it's the earnings call that I thought it really would come down to. And I mean, the market obviously liked it. Like it's aftermarket, you never know, but it's up a bit, and there's a reason for that. Like he instills confidence. He's talking about a meaner, leaner PayPal. He's got his work cut out for him, but I don't think he's understating the difficulty. The one thing that I don't know if I heard it right, but if I'm correct, they said a 75 basis point expansion that they were forecasting for. Was that for quarter 4? Rabinovich was saying that?
I'm not sure if I caught it. This is why I like the transcripts so much more.
Yeah.
Because whenever it gets number heavy, it's hard to jot it all down.
I'm pretty sure that was for overall gross transactions. So they're again reaffirming quarter 4 margin inflection. They're talking about margin expansion for Braintree. Like we've earned the right. He's talking about SMBs and the focus on that, and of course working with the small businesses and expanding there. Just like, man, I'm excited.
Yeah, Neil, go ahead.
Yeah, no, I've shared the same feelings. I think the report was okay. I mean, at the point where we're at, anything was good enough for us. And
Yeah.
it was all about the earnings call. And Chris came in, and to be honest, I did feel a little dig at the previous king at the helm, the previous CEO, basically saying, "Look, you've got a great company here. I don't understand what you guys have been doing here for so long." I like the commentary. I think the market appreciates that. I think the stock went up during the earnings call, which is also always a good sign. But overall, yeah, I liked what he told us. Now it's time to execute, because it's all great, fine. You want to talk, but now it's time to get to work. And I mean, he just came in, so we'll give him time.
Yeah. Yeah. Quarter three was about, setting up the vision, the expectations. I feared a kitchen sink. Like I didn't think it was likely to happen just because the way that Schulman speaks, I think he would have been frank with us. But you never know. And so I thought there might be something like they'd revise down expectations, move out quarter four, margin inflection. We didn't get that. We got the opposite. And, it just, so the expectations, quarter three, quarter four has to be execution. And if we see that execution following the remarks here, and even an acceleration, good things are going to come. Happy returns.
I think TJ said it well. Calling yourself a growth company was great, but you need to show it. One thing that they will show for sure, though, for sure, is just the amount of more transparency that they were talking about. Let's talk about how these companies actually break down individually. That will give more of Wall Street and retail investors a lot more to play with to see how the company is performing. Right?
Yeah,
Looking at PayPal as one big unit is getting really hard now, knowing how many different facets they're getting into. So,
yeah, that was one thing I think that you and I talked about, was just with his presentation with Intuit, the way that they break down their numbers it's far more transparent. Like you can dig into the transcripts and like hear remarks here and there, kind of piece things together for PayPal, but he's bringing exactly what I was hoping would come over from Intuit, which is not just the S&P focus, but that transparency, so we can actually see the inner workings and not have to guess and piece things together. So I was like, man, as a shareholder, like that just instills me with more confidence, because I hate when companies do the opposite. Palantir won't go there because it's not the earnings call, but they don't make things easy to understand. They remove some slides. It is annoying. I don't love that. It does the opposite for me. So here, this is great.
Yeah, there was a couple things that I heard in the call, and I'm not trying to turn negative here, but it just confused me a little bit, because obviously there was a lot of stuff that I very much liked, and is their go-to-market focus for consumer, small business, and large enterprise. I like that they said that there was growth in all three areas. But one thing I didn't like is they said there is a lot of duplication and a lot of opportunity for automation on our team. And obviously, I mean, at least the way that I think about that is you probably have marketing teams for some of the companies that you've brought on, and there's people doing two different or the same job on both sides of the equation, when really there could be one team that does it all. That's exactly what Nubank is going through right now. They're cutting headcount while growing because the teams are consolidating. So that's absolutely amazing. And then at the end of the call, he said, we're planning on adding a bunch of senior talent to help grow the team. Where are you going? So it sounds like they're just going to cut a ton of headcount, but bring on a little bit more of the, more of the brain share, trying to get some people with great ideas onto the team, which might be a lot of stock-based compensation. Who knows?
Yeah, that's a double-edged sword. Based on like who Alex Chris is, and I'm sure John Kim will have some input there too. They're talent magnets, and they A+ people like Alex Chris and John Kim, they recruit other people that are A+. So if it was something that I just didn't have the confidence in, I'd be like, okay, it's meaningless stock-based compensation for no purpose. So it's going to be more stock-based compensation for sure. Not excited about that, but there's a reason. I hope we hear that reason. Like it was a bit ambiguous there, so maybe with like a buy-side chat transcript, we'll hear more on that. But if you look at on the slide deck, the non-transaction operating expenses, there's a lot of decline there, especially if you caught that 23% decline on sales and marketing. So
yeah,
that was interesting. I don't know. They've cut all across the board. I'm glad that they're cutting the technology and development kind of the least. The general administrative probably can get some more trims there. But yeah, that was.
I didn't hear the timeline, but they said something about active account growth back again. We're near the bottom of active account growth shrinking.
I missed that.
You guys were probably not even here at that time.
I was just about to ask, because it decreased again quarter over quarter. So I was wondering, maybe at the start they said something about that, but
they said. I think they said they're going to start, or that's going to start continuing back up now. But I don't remember the timeline on that, if that's for Q4 or a 2024 objective.
Yeah, I have to read through the transcript. I didn't catch that at all, so that's not what I had expected. So
yeah,
it's not as significant as some people made it out to be. It's certainly like that was the metric that they made themselves out as, like, this is the most important thing back in COVID. They've shifted away from that, rightfully so. The transaction margins per account continue to increase, so that's really good to see. But yeah, if they can see an inflection in that just takes away one more leg of that bear argument, which is weakening.
Need new attorneys for pending bankruptcy. you can never change some people, eh?
For the lawsuit, right?
No. But his clarity, I found, was really good, especially whenever talking to about small to mid-sized businesses. He knew exactly where the pain points are for small to mid-sized businesses. And one of the things that he spoke about that didn't actually cross my mind too much until he said it was SMBs need customers. That's what they need. They need a place where people can find them. PayPal has people. That's something that they do have, is a ton of accounts. It reminds me of Shop Pay. If you guys follow Shopify, they have a whole bunch of merchants, and then they also have an app that brings on 100 million people to say, these are some of the featured products right now. Why don't you go check these out? And so if you can turn PayPal a little bit into a shopping app for PayPal complete payments, you're hitting both sides of the network. I think that if you have 400 plus million active accounts, that could sell very, very well.
Shopify does it also with their Copilot, the magic thing, where basically you search for a product and then it just links you to one of those small stores. And then there is also Block with Afterpay. Their app is also showcasing small to medium-sized businesses in the app, which is definitely driving sales. But yeah, PayPal, they've got, like you said, they've got so much data that they can work with. It's just a matter of what they do with it and the execution. But yeah, I'm happy that he's here. I'm happy they've changed leadership and they're looking to maybe add some more. But yeah, now, time will tell. We can say call was great, report was okay, but now, we have to wait another three months.
Here's the thing. I feel like the stock was the report was okay, but it was priced as if it was going to be terrible.
Yes.
I think some people were worried a little bit that potentially we might have seen what happened to all these other fintechs. Like, they report, you see guidance, the stock falls 30%. And the fact that we were even up 1% after hours, I was like, oh, thank God. Okay.
If it fell 30% based on like these numbers and the expectation, I would actually be selling some Palantir and picking up shares. I didn't do that today. I just used all the free money I had. It's like, I'm getting more shares with what I got right now. I'll add more next week. But man, yeah, I think the only thing that really could have sold it off is if it was a kitchen sink earnings where there was a lot of dirt that Schulman had not really talked about, and then they shifted those expectations of the inflection, or had some sort of, like, they started mentioning Pinterest or something like that, which Alex Chris is no dummy. He's like, he knows what's up. So like that was an earnings call, like, geared towards shareholders, like, just to instill confidence, to say, hey, I understand what's going on. I'm here. I got it. The cavalry's coming, bringing in some extra people. Yes, SBC, but we got this, guys. So
yeah. I did like and I think this actually was said before you guys had joined, but they're going to put a little bit more focus on Hyperwallet. Payouts are becoming very popular, and so that'll be some growth there for Braintree as well. The only thing that I worry about with the Braintree, the margin expansion for Braintree, I don't think that that's something that Dan Schulman did not consider. Okay. Everyone would want to price their product higher than what they're currently pricing at. I just don't know, because, Alex Chris doesn't necessarily come from a payments direct background. is Braintree actually going to be accepted at a higher margin? Will Meta, will Uber be willing to pay for a higher rate than they are now? Or are they winning clients because they're so cheap? Does Alex Chris know why they're winning clients? That would be interesting to see.
Yeah, hopefully there's more discussion on that. But I mean, part of that is just the mix shift of who their Braintree clients are. Going from North America, where it's the lowest, most competitive rates, and those mega clients, to shifting to Europe and shifting, and adding some smaller businesses, or not as large businesses that don't have the leverage as far as all the discounts that Braintree would provide. So it's just a natural product, partly of that. But I'm kind of curious as well. Like, one of the reputations of Braintree from competitors is that they're winning based on margins only, which there's a combination of factors. There's a guy I was talking to just in private messages, which I'm not going to repeat or post his stuff because it was not made for that. But at least in North America, that those not acquisition, help me out. It starts with an A. My brain's fried. I'm having a Braintree moment. Something rates, authorization rates.
Okay, sorry.
Man, authorization rates in North America. Like, he was like, yeah, I could see why Braintree actually has higher authorization rates in North America itself than overseas, than other competitors. So there's some real tech opportunities here, but it's just partly a natural function of the expansion of Braintree. Whoever they go to, it's going to mean higher margins.
Sure. Yeah.
I mean, we're going to get more information, I think, in a couple of weeks, so not so long. There is Edion that has an investor day, so they'll give us a bit of a business update, which should be interesting.
Yeah.
And I'll also be streaming that, guys. It'll be like a full day thing. So if anyone, either Neil or Roy, if you guys want to be on that panel as well, or you guys as the viewers, if you want to see Edien's investor day, it's going to be some fun. So is that the 14th or no? Is the 20 something? Let me double check that. It's in my calendar. But regardless, I'm super excited for that. I'm actually a shareholder of that company after the large dip. So
it's next Wednesday, November 8th. So I've been close to buying a couple of times. And it's an excellent company. But even just maintaining my PayPal position, it's a must follow. It's has good information. It's extremely well run.
Yeah.
Yeah.
I expect with them, we'll hear that the sky is not falling in Europe, unlike Worldline might otherwise say. So
they're dropping off some of their lower quality customers. The churn that's actually happening, which they said was slower than what they expected, by the way, in active customer counts. But the customers that they are dropping off of PayPal are coming from Latin America and Southeast Asia. So still are retaining more customers than they had thought, and in higher monetizable geographies. Quite interesting. The Happy Return sale, Roy, you were correct. They made quite the amount of money on it. They didn't say what they're going to be spending it on. If they're just going to return that straight to shareholders, I think that's just going to go in the bank until they find some use for it. But yeah, I'm very excited. I think consolidation in this company is super important. I think that can bog a lot of companies down, and that new management sometimes needs to step in and make the smart choice to say, hey, we are a little bloated in these areas. We could be much tighter, and we need people to kind of step it up. And, the underperformers have to go. And that's sad because of the size that PayPal is at. It actually makes quite quite a large impact on society. But still, it's like the profits come first for a business, especially whenever they're shareholders. So
unless you're Jack Dorsey, then you don't really care much.
Yes.
Roy's on your team.
That's why I was glad that Neil was joining us today. It's like another, and you actually invested in Block.
And I am a shareholder. Yeah.
Love it, man. Love it. I don't hate the company, but Jack, man. Yeah. Anyway, the Happy Returns, they made $329 million. That's profit off of that, which is phenomenal that they bought in the middle of a huge bullish cycle where everything was overvalued. They're like, hey, we actually made money off of that. So, I think that since they didn't say anything, it's just going to be put in the piggy bank, which honestly, it's probably not a bad idea, especially as free cash flow needs to start accelerating. The first analyst question, I didn't fully catch what was said there. I know he was asking about like basically if there are other cells like this, and if I understand correctly, they didn't say no. They said we're kind of looking and seeing what we got.
Well, so I don't have all my notes written by question. We'll have to go through the actual transcript, and I'm sure it might even be posted by now. Let me check. Yeah. But that being said, one of the things that I thought was weird, just going off of that, was the fact that he said, we need to stay focused, and then he also said there's a lot of opportunity for money outside of payments, and that we need to expand. Right. And so where are you looking to? I want to know what he's expecting. And is that coming from a merger and acquisitions, or do you just think that we can just grow into it? Like, is that are you just talking purely buy now, pay later, or like, what's the breadth of what you're talking about?
Yeah. Hopefully not Pinterest.
Yeah.
I mean, Venmo is, I missed a couple of things with Venmo, but I think Venmo still has a long way to go. It's untapped. I mean, it's a very, very powerful app. Very powerful app. They can turn it into a sort of a payment e-commerce super app if they want to. But yeah, I think that's a huge growth possibility that doesn't require any M&As.
Well, one thing they did speak about, because I didn't find they did talk about Venmo all too much, but was the interoperability between Venmo and PayPal. That you got two massive networks that aren't really talking to each other right now, and they own both of them. So why don't we have a little bit of peer-to-peer action here, and you can make a massive payment network?
Yeah, I don't understand that. And like when they rolled out the stablecoin, they're like, hey, we got the stablecoin, and then a month later it's like, and now it's available on Venmo. It's like, really, guys?
So well, hopefully that might be the one way that they can send money between each other was PayPal stablecoin. But
yeah, it's going to be fun to go through the transcript. Just I missed a little bit of stuff. Sorry for the delay there. And there was just a lot of information. So it's one of the fun things. We'll get since this has been released, I'm sure there will be a couple other follow-ups. Of course, I saw the new CFO. Were you familiar with Jamie? Other than the name, like I'd heard the name before. I looked briefly at her resume. I saw Cargill was in there, I believe.
Yep.
What do you think about the CFO?
Personally, I know nothing about her. Haven't heard the name before.
Yeah,
I'm going
to have to do some digging. So
yeah. Seems like there's going to be a lot of new executives coming. That's what I have a feeling about. And also, they did say that they're sitting down with the management team before Q4 to give a proper vision on what they're going to focus on next. And they're going to have that by Q4. So I think as exciting as this quarter was in hearing management commentary, it will be as exciting to see all of the new disclosures, transparencies, and vision in Q4. Hopefully, Alex Chris actually delivers on that.
Yeah. I don't see any reason why he won't. I mean, nothing's for certain, but yeah, we'll see his fingerprints all over it. Whereas you can get glimpses here from what he said and some of the actions that PayPal took, but a lot of that was set in motion under Schulman and John Kim and others. So yeah, we get to see his thumbprint on the business Q4 for sure, and I'm excited about that. I thought that was one of those critical things where it's a little bit early for Alex Chris to lay that out here, but I'm glad that he gave us a few tidbits. But yeah, if he didn't by Q4, I would probably trim a little bit just to, be like, okay, maybe this is worse or harder to fix than I thought. Although there's things to fix, but it's not a disaster of a company. So
yeah, Neil, I'd love to hear how you look at this company a little bit, just in general, how you're expecting on playing this for the next 3 months or so. Do we see any large movements until Q4? Do we just have to wait out the macro? What are you looking at?
So for those listening or watching, yeah, it's not one of my core position. I bought it purely because it's super cheap and it's still PayPal, even though there is noise saying PayPal is dead, nobody's using it. It's still highly popular and very much used in a lot of countries worldwide. But yeah, to be honest, maybe a 10-15% pop in the next month or two or so. That's what I'm expecting, but I don't really see, unless there's some huge announcement that they come out with, I don't know, revised guidance in 2 months, I don't know, upside, but I don't really see that happening. Macro could change that, but after hearing what Jerome Powell had to say today, I don't really have my hopes up that much. So no, unfortunately, we'll have to wait another 3 months. And yeah, I mean, it's still an earnings call. It's not an It's not an investors day, an investor presentation where we get suddenly huge announcements, this and that. So yeah, we were a bit restricted with what maybe some investors wanted to hear, but I got a lot of answers. Not all of it, but yeah, time will tell. It's certainly better than what we were enduring for the last 2-3 quarters and earnings calls. So yeah, for now, I'm really not expecting it to go back to $100. I know people are very excited to see it a bit up after hours, but no, I think we have to be a bit realistic right now. And yeah, the CFO is from Ernst & Young, flicking from the comments here.
Yeah, okay. Ladies and gentlemen, aside from that, unless you guys have any other commentary, that's the show. That's PayPal's Q3 earnings results. I'm going to be covering a little bit more of this and going over the charts that I've created on the numbers on the Fintech Frenzy. That's a daily show every day at 8:30 p.m. Eastern Standard Time. Both Neil and Roy are both invited if they'd like to join. No pressure on you guys, obviously. If you guys want to hear from them, aside from just being on this show, you can check Neil out at Couch Investor on YouTube, or Roy out at @cross_roads right there on the screen on Twitter. Ladies and gentlemen, thank you all so much for watching. Hope you guys enjoyed the show. But bye for now.